Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at what happened to the US markets after the rise in interest rates by the Fed yesterday. But as usual, let's start with our risk disclaimer. A reminder that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades. Right, this is when the Fed did their announcement. You can see the market, if I perhaps go down to a shorter time frame, perhaps on the 3-minute, scroll back to yesterday. This is a chart of the YM, by the way. You see the markets went down, they went up, down a bit, up. And ever since then, they've been declining back down again. So when the Fed makes interest rate announcements, you can get some very sharp spikes in the market. But let's have a look at what MTPredictor was saying on the lead up to this. So if I take our MTPredictor training mode and go back in time a bit, can you see on this 15-minute chart, this is a 15-minute chart of the YM, we had a decline into the low the previous day. Do you see that decline there? If I right mouse click, do Elliott wave intermediate, can you see how we found a 5-wave sequence? 1, 2, 3, 4, 5, with the low coming in right at the typical wave 5 WPT. So what do we know about what happens after the completion of a 5-wave sequence? Well, first and foremost, the initial area of support or resistance is normally the DP of the prior wave 4, and you can see this is what happened. The market went up into that level, backed off a bit, then started to rally a bit. But what happens if this level is exceeded? What happens if the DP area here is exceeded? Well, then the market tends to retrace back to the DP off the start of the sequence. In other words, you go right back to the start of the 5-wave sequence, which is here. So if I right mouse click, do decision point, this would be an area of potential resistance. So can you see how that was on the chart in advance? It's there before the market even gets there. So let's see what happened after this interest rate announcement. So I turned training mode off, and you can see, yes, there were some fairly sharp wiggles in around here, but ultimately the market did go up and just tagged this resistance level that we had on the chart in advance, and since then the market has declined sharply. So this DP seems to have caught the high quite nicely. Let's have a look on the ES. Same kind of thing. Here's our 15-minute chart. Here's our decline down into the low. Again, a 5-wave sequence. A DP from the start of the sequence, from that pivot, caught the high as well. So this is showing, whoops, I didn't mean to do that. Just put that back on again. So this is showing that the market is declining down. So where's the market likely to go to now? Well, I say likely, we never know for sure where the market's going, but as the market goes down, an obvious area of support would be a DP of this previous low here. As you can see, we haven't quite reached this level. On the 15-minute chart, this is very interesting because in our MTPredictor training webinar a couple of days ago, we were looking at the DP of this previous low here back at earlier in May. So if I right mouse click here, decision point, we were looking at this decision point as a potential area of support. And even though, yes, it's a valid area of support, we did even have an automatic VS buy setup here, I was actually urging caution on this, saying that we may not, or it may not provide the support that we anticipate. The reason being is because we'd had some very good DPs earlier. The DP off this low caught the low there perfectly. The DP off this high caught the high there last week really nicely as well. And one thing I said is that after we've had a couple of DPs that work absolutely perfectly, work as well, then it's very likely that the next DP won't. It's just the way the markets go in cycles, and all kind of analysis goes in cycles. So I did actually express caution and saying, even though there was potential support here, just to be very wary of this, that it may well not hold. And that's why when we come down to the 15-minute chart, it's no surprise really to see By the way, that's the decline down into the first daily DP, but it's no surprise to see the rally up into that resistance area and now a continued decline down. So where to from here? Well, it'd be interesting to see what happens if the market does indeed reach this DP support. If it does, one thing I did look at on the ES was if the market does go beyond that DP, so I couldn't get my mouse working there. If it goes down beyond this DP and we make 2 consecutive closes below this DP level, then we could get a continued decline. So this is why we call these levels DPs, because it's decision point. The market makes a decision at this particular level. So this will be a very important level to watch over the next couple of days to see whether we do get 2 consecutive closes below this, or whether we do actually find support again at this level and we get a rally off this level. But either way, the market is at quite an important junction right here, right now on the US markets.